Hello and welcome to a video called Why Swing Days Matter. If you're new to the channel, my name is Marty Maidan. I'm an ex-finance professional and I'm also a fintech developer on calculating in advance swing days and swing hours, which you can find details here on the YouTube channel. Today we're going to do this video on why swing days matter, and having them in advance can really help you out. Before that though, I'd like to share a post which I saw from Michael Berry on Twitter, and it was like really nice post. Let's check it out, and because I've got a good answer to that one, which is this post right here, and it's a really good one by Michael. He's saying nothing else matters right now, and you can see Trump signing one of those government orders, executive orders. Your technical analysis is no match against my tweets. But as you know, here at the Global Trader Club, or if you're not new, if you are new and you don't know, you will in a minute, how swing days that are calculated in advance can really help. In fact, I've posted something just above that as well, with a bunch of examples. But on my x.com GlobalTrader.Club profile here, you can see all my posts as well. But let's take a look at the charts and see why having these in advance can really help us out when we're trading. Let's check it out, and we can actually trump the Trump. Now here I have, as you can see, SP 500. All right, now all of the swing days, as you know, for 2025 I have already calculated in 2024. The swing days that I've calculated and I am posting in the members area is specifically for intra-week trading. So we're not having significant swing days, but significant swing days can also be calculated. I am known for doing them as well. It just requires a different calculation. But because we're short-term trading, like intraday trading or day trading, or maybe keeping a position from one swing day to another, or day trading but keep adding positions or entering new positions from one swing day to another, major significant swing days are not included in the members area. But like I said, as a custom calculation, I can calculate the major swing days as well for any asset, and that's also a part of our services at the fintech company as well. So let's take a look at what we've got here. Now with the swing days, first of all, let me put up here the members site. In the members site, as you can see, this is for this last week, 14th to 18th of April, and I've got all of these here until the 2nd of May, as you can see at the bottom here. All right, on this recent post, and the week before that was 7 to 11 April. The week before that was 31st of March to 4th of April. In fact, this weekend I'm also going to be posting the whole month of May swing days for intra-week trading and the swing hours of the day, just like we've got them here. All right, so, and every day, as you know, has a video except Fridays, because I don't work Friday. Sometimes I do add them, but as you know, Friday was a Good Friday as well. So knowing these swing days in advance for gold, euro, dollar, Bitcoin, SP 500, Dow Jones, Nasdaq, if you're trading these, is already like helping you out, because all you have to do then is match it to your technical analysis. Now with our company, with the fintech company, we also have a pricing model, which is also software currently on the MetaTrader 4, which we can kind of like work off from. Now these are the swing days. This is the daily chart for SP 500, and let's get me out of the way and stick myself down here. With the arrows, you can see here, all of the arrows are noting swing days. Okay, so if we are matching these, for example, to our technical analysis, then that swing day for us is relevant. Okay, and how do you match it to your technical analysis? Well, very easy. When we're doing technical analysis, it's really nothing complicated. I take a look at the market with 5 different techniques, because one type of technical analysis will not work. But if you've got a combination, you can do a correlation on that combination, giving you good pricing. So once we have a good pricing level, if I understand, for example, okay, if I understand that this zone here is a place, oops, not this one, I wanted to get that's the one, here we go. So if I understand that this is the zone, anything that comes into this zone and is a swing day for me, or is close or is on that swing day, is a good opportunity. Now once that happens, as you can see here, the market just took off. Okay, so having an understanding that on the swing days, if we are at the lows, then we are buyers on those days going up. If we are at the tops, look at the tops, and we've got swing days, look what happened there, market coming down, coming down. So understanding these swing days are very important when you're matching it to your technical analysis. When you're matching it to your technical analysis and you got pricing on your side, which is what we're getting from the PST indicator. Remember, the PST indicator is not some wavy line giving you all kinds of things that you need to interpret. We don't go with that. We go with a specific price. Also, once you got a price, once you have a swing day, then that's it, you are selling. Now look at the arrows here. This is way before the market started to crash down. Okay, I've got 3 arrows at the top here. Well, I'm not thinking about buying. The market is like aggressive, going up, right? Yeah, it's an upwards market. Why am I not thinking about buying? Because I've got a specific line here. As you can see, this is not a trend line. Okay, that red line is not a trend line. It's coming all the way from there, but it's not a trend line. It is a specific calculation based on cycles. This is why I've got them on the lower end, on the upper end as well. As you can see, the market pretty much came down here because that's the low and that's the red line. Okay, and look what I've got down here. It's an SP 500 swing day, and look what happened. Market going all the way up there into the next swing days, where the market, as you can see, slashed down a little bit from there. So it's all nice and easy if you match it to your technical analysis. This is why technical analysis and pre-calculated swing hours and the swing days is just crucial for minimum risk and maximum return, because then any kind of technical analysis that you specifically are doing, let's say you got your own way of looking at the market, which is fine and it works for you, great. So wouldn't knowing the swing days help you out? Wouldn't just say, wait a minute, my bias is to the downside, why don't I just short this because it's a swing day as well? Where do I need to short it? From the highs. If it's a bias to the upside, I'm going to buy this. Where should I buy it? Well, let me buy it at the lows. In addition to that, the swing day and pricing on the daily, pricing on the weekly. Okay, look where the market bounced off at right here. This is a blue line. Okay, it is showing me, you can't probably see it on there because in order to make the platform a little bigger, I have to chop down the size. Let me bring it back in so it's a bit more clear. There we go. I think I've got it. Now you can see a value down here, right? It's 34.91. This is a weekly chart. So this week we had 2 prices. One is this one, 37.15. One is 34.91. So if the market does sell, we know where we're coming, right, on the weekly. And that 34.91, because it's a weekly price, it's going to be there all week. This is not going to change. Well, it will on Monday, but not during the week. So I've got 5,209 right there, and this is 5,209, which is also the weekly pivot right there. So knowing that alone is bingo, because you're not working with some wiggly lines on an indicator. You understand the swing hours, you understand pricing, you understand the weekly hot levels where the market buys, and look how it just bought up. On Wednesday, I didn't have a swing hour there. Okay, the swing hours, as you can see, are these ones here. So when they match a price, we're in there. But I always do say, PST on a weekly, that's like very, very highly likely good trade. And this is exactly what happened here. And you can see on Thursday as well, Friday was good Friday, so it was the holidays. You can see these are trading hours, market coming down, pausing there. This is another trading hour going slightly up to the next trading hour, coming down. So during the day, we actually know when the markets are really moving. You could do this for anything. We can do this for whatever you want on any asset as well, like on the euro dollar too. Euro dollar, for example, was all sideways. It's not a dangerous situation if you've got hours, because if the market is going sideways, you're going to trade the tops and the bottoms. If the tops and the bottoms correlate with your trading hours, you will not suffer. Okay, so for example, let's make this here, let's bring this here. All right, so as you can see, look, these are trading hours, right? So this is last week, Friday, Thursday, Wednesday, Tuesday, Monday. All right, so market comes into Tuesday. Now on the euro dollar, what did we have for a swing day? We had Tuesday or Wednesday. I've got 2 days there, right? So I'll move this up a little bit, I guess. You can see it better. All right, these are the swing days, and euro dollar, you can see they're Tuesday, Wednesday. If I got a slash, it's Tuesday or Wednesday. So the market comes into Tuesday. These are the trading hours, okay? And where is it coming into? Well, it's come into where the market filled in a gap here, which I talked about. So that would be the zone, right? That's the zone. It's the trading hour. It's a Tuesday, okay? And the market goes up. Now, let's go to the euro dollar. Now the euro dollar on the weekly, this is a sell zone, right? So I've been saying, guys, you know, if you're going to sell the highs on a swing day at a trading hour. Tuesday, the market is not at highs. Why? Because the high is in that zone. You see, this is where they sold off. So if you're going to sell, you're going to sell in this high zone here where they sold. But you can see the market did not go there at a trading hour. The market was down at a trading hour, filling a gap. So if you know technical analysis, and if you're day trading, or even if you're position trading, if you sold here, wouldn't it be important to know, well, wait a minute, they filled in a gap at a trading hour? Maybe I need to manage this trade and not get excited about this big short happening. Okay, knowing these in advance is a blessing. It will help you manage your trade, not just according to price, but according to time, according to the hours. Okay, knowing when the market is going to be up and down. Coming to Wednesday, trading hour, market shoots up, keeps going into the trading hour, and then comes down, and then we've got a sideways market here. Thursday, it's all sideways. Nothing to do unless you're going to buy the bottom, sell the top. When are you going to do that? Only if there's a trading hour, because if there is no trading hour, you don't want to be in there. So this is previous day, Wednesday, support at London, support at New York. Market comes down, trading hours are not at this time. So you just leave it alone. Don't muck around with it. And it's a good thing we didn't. Why? Because it's just sideways choppy, and the only time you want to trade it is at the edges at the right time. So knowing the swing days, if you look at the euro dollar swing days, these are all actually also on the website, because you can go to the archives. You can look into all the swing days until 2022, I think. Yeah, I really started at the end of 2021. So if you look at 2022 and onwards, you'll see the swing days for pretty much all of these. And then all you have to do is match it to your technical analysis, whatever kind of technical analysis you are doing. Okay, look how amazing that's all working. The market sold here before, so look at the swing days. They're right up here. So what do you want to do? You just want to sell it off. Down to the next swing days. Look at that. This is really interesting. Good to see. The market sells off, comes down into these 2 days where they're like Tuesday and Wednesday, like I just showed you on last week's. You see how the market stops, goes up a little bit, and then sells off again here. Okay, so you know when to stop. Look at the arrows. Every time there's an arrow, market's kind of like gone up. So if you were a seller, you'd be cautious here. You'd be managing your trade here. Here as well, this was a swing day. I put an X on there because the low was the next day, so this wasn't really a swing day at all. Here we've got another swing day going all the way up. That tick there is a Friday, so from Monday all the way into Friday we were up. Next week, Monday, Tuesday, Wednesday, big fall off coming down. So I guess that should be it, because that should be a Friday. That's the 1st of November. Correct, and that's the 4th of November. So that is a Friday, Monday to Friday going up. So knowing all the swing days, look how beautiful that is. Just knowing when to buy the lows, knowing when to sell the highs, because the market fell. Retracement, selling again. You can also sell on the next day. It's just a matter of matching your swing days and your technical analysis together. So knowing all of this in advance is going to be very, very helpful. Also in gold, I had a bit of a template issue with this one, so when I changed it, all the arrows went, but you can see in my previous videos that all of the swing days are like calculated in advance. Here as well, look with gold, even when the market's going up, we've got a sell-off day here. Here was a Monday, the market turned into a breakout, so this wasn't a swing day, it failed, okay? But the majority, it's not 100% obviously, but the majority is good, and when it matches your technical analysis, you're gonna nail it with price. I'll do another video on how swing hours can really help, but this was specifically about why swing days matter, simply because knowing them in advance, then you can manage your trade. You can target your trade with not just price, but with a day. I can say, you know what, I can follow this until Wednesday, because Wednesday is a swing day and we were a seller on Friday, so Monday I can enter short going into Wednesday. Knowing that already in advance, anticipating it, matching it to your trading technique and technical analysis, you're just gonna be very, very efficient, effective, and you're always gonna trump simply because they won't matter. All of the swing days are calculated before the elections, before anybody did any tweets. I had them already calculated. Swing days are independent of news. No matter what the news is, they're highly likely going to work, and it doesn't matter what anybody says. The world does not function according to what people do. The world functions in its own way, and people react to what the world does. It's not the other way around. Hope that helps. Hope kind of like you can get a better perspective of what I'm trying to talk about here, that the cycles of nature, the cycles of the world will not change according to the rulers of countries, or even we had a ruler of the planet. It won't change. You can't change billions of years of laws of nature by anybody coming somewhere with power and chit-chatting on X.com. Have a great weekend. All the best.